Hey everyone, and welcome back to Option Alpha and this weekend's video recap of the markets. It was a pretty slow week. Hopefully, everyone had a great Thanksgiving, very safe and happy holiday. So we had a off day on Thursday and about a half trading day really on Friday. Pretty much a very slow week, generally speaking. The markets some good moves on earlier in the week. And I just wanted to recap a couple things to point out, I guess, going forward as we really start to kick off the last month of the year and head into December in the holiday season. The first thing I wanted to take a look at, and this is in no particular order of course, is crude oil. Crude oil had a pretty good day on Thursday. I'm sorry, on Wednesday of last week, and was up about 3.5% almost. Had a little bit of sell off on Friday when the markets were open for a little bit, but overall, it's pretty much bucked the trend that it's had over the last half of November. So I'd say it'd be pretty safe to assume that crude's going to continue to head higher, start reaching towards the $90 price level. I don't think it's going to get there before the end of this year, but it definitely looks like it's heading in that direction. You can see that it's been sort of trending higher ever since July, really, of the summer here. So that's just something to take a look at as far as crude is concerned. The other thing I wanted to look at is the dollar index. Now, the dollar index has been pretty important here over the last couple of months. And what I've done is overlay this Fibonacci retracement levels here in blue, and these are these blue lines that you see on the chart. Now, I think what's important to realize about the dollar index is that it's had a heck of a run up since really the beginning of November, and pretty much one of the strongest run ups that it's had recently. The most recent run up, it wasn't even as strong as this one back in August of the summer here. Now you can see that we're not only coming into an area of resistance on the Fibonacci's here in this blue level, but it also happens to be this past support level back here in August. So we know that past support is going to be strong resistance going forward. Now for the dollar, the Fibonacci's have been really, really strong as far as good targets. You can see that it hit its head and it acted as a resistance level both here and here in the end of October. And then it almost bounced off of that same level back down here in November. So the Fibonacci's for us as far as trading wise have been really good, really strong. So I think that the dollar is going to start to see some sort of resistance come into play here right around 58 on the dollar index here, and maybe have a little bit of a correction back down to this mid 56 level before continuing higher if it does. So that's obviously something that's going to affect commodities and a lot of other things, the equity markets as well. As far as the VIX is concerned, the VIX has been trading, just kind of bouncing up and down in this, 1750 to 23 range, call it. So I don't really see it moving much, but it always has the ability to have a huge breakout to the upside. Now I do think as far as the S&P is concerned, what we have to be careful of is getting complacent here in this little downward trend that we've had over the last month or so. I mean, November hasn't been good. Retail sales were okay. They were definitely better in the first kind of couple days of November heading into Black Friday. But that's really going to be the driver, I think, for December and the holiday season. If we continue to see some good retail numbers and the expectation is that retail numbers will be better than last year, then the market could easily rally back up into its highs of November and October. If we don't, then we will quickly be heading towards the 1125 range and this other major Fibonacci retracement level, which happens to be the 50% level and is always the strongest level going forward. So that's really a recap for the markets as far as our option portfolio is concerned. Everything looks really good. We've had a lot of really good trades recently for the option portfolio, entered a lot of things above the market before it turned over, and now we're starting to enter some more trades below the market, anticipating that the market's going to rally higher. So this week will be good for us. We're going to enter new trades for all three of the strategies and really shore up the December portfolios before we start building on the January portfolios the week after. As always, happy trading.